Thank you so much for joining us on Mongo Spaces this Thursday evening. Our aim today is to understand the journey of Kuza Asset Management from zero to 1 billion in assets under management. So to help us dissect that, we have James Mose here, who's going to help us break that down. I note that you're a CFA, so I will come to that a bit later in the conversations. James, maybe you can tell us a bit about yourself and a quick high-level maybe view of yourself, a quick elevator pitch.
Thank you for having me this evening. So my name is James Mote. I'm the CEO of Kuza Asset Management. So before Kuza, I've been in the industry for quite some time. So my years of experience now come to 17 years. So I started from the sales side. So I started my career at Dyer and Blair Investment Bank, then went to Stanbic Bank as the investment analyst, Old Mutual Investment Group as a portfolio manager, UAP Investment as a portfolio manager. Old Mutual acquired UAP, back to Old Mutual, but very short thing left for Britam. At the time I was leaving Britam, I was the chief investment officer overseeing about $2 billion in assets under management. Kuza was founded in the year 2021. So towards the tail end of 2021, then we applied for our CMA license. Just before end of 2021, we managed to get our CMA license. Towards the end of actually April 2022, opened our doors for business beginning of July 2022. Got our first client coming in 4th of August 2022. Fast forward, now we have 1,300 clients, and we just passed $1 billion in assets under management. That's James, and that's Kuza Asset Management in brief.
All right, thank you so much. There's a lot to unpack there. A quick one. What does a CIO do? What are you doing at Britam with 2 billion assets under management? How do you do that?
Okay. A chief investment officer is basically the person heading the investment decision making of an asset management company. So you heading a team of portfolio managers and a team of investment analysts. The 240 billion shilling predominantly was actually pension assets. Of course, all these pension assets have their unique investment policy statements, and of course, they're heavily regulated by the Retirement Benefit Authority. So, as you make the investment, the confirmed within which you must make those investments. And then we also had, which of course, highly regulated as well by the Capital Market Authority. You have wiggle room to make investment decisions, but you must make sure that the unique investment policy statements for all these products are observed, as you then make sure that you're going for a competitive risk-weighted return. And you don't just make the investment. Of course, there's a process. The research team then comes with the recommendations. Those recommendations are projected before an investment committee that has membership of the research analyst, investment analyst, portfolio manager, and of course, the chair of that investment committee is the chief investment officer.
Then what made you jump from formal employment to being an entrepreneur at Kuza?
That's actually a very good question. So the Kuza Asset Management journey started maybe way earlier than 2021. So of course, I had this vision, this idea of starting an asset management company, and just looking at Kenya where we are, just look at, for instance, our saving rate. If you go by the World Bank data, which looks at savings as a percentage of GDP, then you try to look at the Kenyan data point and compare that to the global data point. There is a big disparity. We're at 16, the global number is at 27. You try drill that number and just look at Kenyan and look at the level of financial literacy in this part of the world. It's actually next to nil. And that claim, if for instance you look at back in deposit, you're looking at close to 6 trillion. And when you look at the cost of funds for bank or the 39 banks put together on average, it's actually below 3%. And the reason why cost of funds, the cost of those deposits, the rate is that low because most of this money has been given to banks for free. This money lies in current account. I saw the opportunity that if for instance then you can push financial literacy, you can actually unlock a lot of money into asset management, and you ought to be competing with the existing fund managers because you'll be creating a blue ocean for yourself. Of course, packaged all that into a business plan, sold the idea to potential investors, and of course the investors came on board, and we then raised enough capital to set up Kuza Asset Management, and that's so Kuza Asset Management be founded in 2021.
Founding, often the problem is not starting. The problem is in getting the first shilling to manage. Then how do you get that? And how do you leverage your networks and access to be able to get that first person on board to be your client?
It's a very good question. And like I said, we opened our doors for business beginning of July 2022, got our first client coming 4th of August 2022. I think the timing was also very good, and not by design, but it happened like markets go through cycle. If you remember 2022, that's the time the Kenyan Eurobond were really oversold. Just looking at, for instance, the 2024 Eurobond that is maturing next month, that was partially redeemed in February this year, was trading at levels of about 20%. So we saw that idea, and as we were waiting for product approval, then we said the immediate product that we can start running with is private wealth management. If we can find high net worth Kenyans who can see this unique opportunity, that as much as yes, no investments without risk, but Kenyan sovereign bond that maturing in about 2 years, trading at 20% on the dollar, that was serious mispricing. And of course, we managed then to convince our high net worth clients who came on board to invest $200,000 with us, because the ticket size for Eurobonds trade in lots of $200,000. So that was, give or take, about 25 million shillings. That was our first client coming on board. Then once, of course, the client came on board, it became easier now trying to sell, because already you have a client who believed in the opportunity. Some more clients came in and got under the Eurobond opportunity. And then, of course, we got our products approved, and now the entry threshold for like unit trust product is very low. So you'll be looking at, for instance, a money market fund. Our money market fund, the minimum investment amount is 5,000 shillings. So that now became much, much easier. Also, we didn't want just to be a normal fund manager whereby you're pushing paper. We knew the opportunity really is just to make sure that you leverage technology. For instance, you don't have to sign any paper to invest in our unit trust product. All you need to do is just, if you're using an Android phone or an iPhone, your Play Store or App Store, search for Kuza.Africa, then you should be able to get our app ready to drop on board. Process that doesn't take more than 5 minutes. It's kind of just to mention. And like I said, we have about 1,300 clients, and less than 10% of those clients who've ever been to our office. Most of these clients have come on board through our online platforms, the mobile application or our client portal, and they've been able to come on board, and they're happy with the returns, they're happy with the customer service. They don't see any need of coming to the office. That's what we would want to continue doing, so that as we scale, most of these clients should be able to perform both.
So what I hear you saying is you're a digital first asset management company, right?
We are among the fund managers in Kenya who are really leveraging digital platforms.
That's good to hear. Perhaps now it would be a good time then to give us a bit of a breakdown on Kuza Asset Management is and what your key products are that you provide to clients.
Thank you. Yes, just going through our product. So we have products that are regulated by the Capital Markets Authority. We also have products that are regulated by Retirement Benefit Authority. So we are regulated by both the CMA and the RBA. So on the CMA side, we have collective scheme. So we have a Kenya Shilling Money Market Fund. We have a Kenya Shilling Fixed Income Funds. We have Momentum Funds, which is a trading fund. We have a Money Market Fund USD. And we have a Sharia Momentum Fund. So if you hear the naming of all those products, we don't have a balance fund and we don't have an equity fund. And that was quite deliberate, because having been in the industry for quite some time, we've seen the performance of equity funds and balance funds in this market, because that buy and hold strategy, they don't make money, because our market is heavily, especially like equity market, heavily. So it's up, down, up, down. So if, for instance, then you don't trade and take advantage of those cycles, and you just buy Safaricom, go with Safaricom wallet for shilling, comes down to 13 shillings, you're still holding it, going to currently about 18 shillings, you still are holding, you may never make money. So then we saw an opportunity now to introduce a trading fund, momentum funds, which basically, just as the name momentum, goes into the asset class we deem to have the momentum then. And once we milk the momentum, we will take to the next asset that we believe potential to actually have momentum. Those are our products on the CMA front. The Sharia Momentum Fund exactly does what the normal momentum fund does, but only then invest in what you call Sharia compliant opportunities. So it will, for instance, touch EABL, it will touch BT, it will touch bank, but you can invest in Safaricom. Then you can't invest in bonds. You can only invest in Scoop. Or you can do a bank placement, but not for interest purposes, but in pursuit of share profit. Yeah, so there are a few banks in Kenya who products that are Sharia compliant. So then our Sharia Momentum Fund can invest in that product. So that on our EMA front. Then on the RBA front, we have an individual pension plan. We have an umbrella pension plan, and soon we'll be introducing an income drawdown product. And by the strength of being an licensee of RBA, then you can manage standalone pension scheme. And also over and above that, we do private wealth management is on the strength of female licensing, and explain this now bespoke high net worth client who wouldn't want then to invest in the unit trust. So they come with their portfolio, we sit down, develop for them an investment policy statement, and then start managing their portfolio. So broadly, those are our products, and cumulatively putting their assets together that then get to more than $1 billion cash.
If I get it correctly, the CMA side is around a quarter of that.
So if you look at our collective investment schemes are currently, so the Kenya Shilling Money Market Fund, Dollar, Fixed Income Fund, Sharia Momentum Funds, and the Momentum Funds, all those are put together, they're now around 400 million shillings. Then the balance is basically private wealth management and the pension act.
Maybe you can repeat them without breaking down the key products so that people can remember that as they maybe seek your services at some point. So under the CMA side and under the RBA side, you can give the key products, just list them.
Okay, so we can start with CMA, so a collective investment scheme. So we have money market Kenya shilling, whereby the minimum investment amount is 5,000 Kenya shilling. Currently, our money market fund is yielding 17.53%. Then we have money market fund dollar, which is currently yielding about 7.05% on the dollar. Minimum investment amount is $100. We have a fixed income fund, zero collective investment scheme, currently yielding about 60%. Minimum investment amount 5,000. We have a momentum fund, which, like I said, is a trading fund and still a collective investment scheme, but under the category of special fund. The minimum investment amount is 250,000, and these are funds that across asset classes enhance for momentum. Actually, like for instance, this year our momentum fund is up close to 40% because we took a bet on the Kenyan equity market and seeing how strong the performance has been thus far. This momentum fund has been a big beneficiary. Then we have Sharia Momentum Fund, minimum investment amount 250,000, and the return currently is expected profit of 12% for Sharia Momentum Fund. Then that summarizes basically the collective investment scheme. But on the strength of our CMA license, we do private wealth management, and private wealth management this specifically for high net worth individuals. You have a sit down, then drafts and investment policy statements at managing your fund. But still within private wealth management, at times we come across key opportunities. Like for instance, what I talked about Eurobond in 2022, going all the way to saying 3. Now the opportunity that we are seeing is the infrastructure bond, because we believe going to next year, rate headed lower. And so the best trade now would be getting these infrastructure bonds at the current level and then trade them as you go to next year. So for such key opportunities as well, we can give our clients access to those opportunities through our private wealth fund. Then on the CMA front, we have our IPP, that's individual pension plan. So basically, these are products. For instance, you've changed jobs. Maybe now you like James, who's worked for, say, 5 employers. So you have your pension scattered across. So this product helps you consolidate all your pension benefits into one key so that even as you do follow-up, you're not following up with 5 schemes, 6 schemes, you're only just following up with one scheme. And we also have umbrella pension plan. So umbrella pension plan, and this for, say, a medium-sized organization whereby it may not make sense to come up with your own standalone pension. So you then plug into our umbrella and enjoy economy of scale. Because if you are an medium-sized organization, maybe your pension is a size of 50, 100 million, 200 million, you must make sure that you're paying for services of fund manager, custodian, an administrator, you paying for annual audit. You must make sure you have your trustees then overseeing the operations of the scheme. It becomes very cost inefficient. But if then you are plugged into umbrella, we have maybe 10, 5 of you. When you spread all those costs across all those many employers, it becomes very cost effective and efficient. We also, in the process of introducing an income drawdown, this for now retirees. So as you retire, you have an option of buying an annuity from insurance companies or investing in an income drawdown. And the income drawdown will be specifically addressing the needs of retirees. Broadly, those are our products, Mukaya.
All right, thank you so much. We're almost halfway through the conversation. Well, so if you're in the audience that you have a few questions, I can see a few coming in. Just go below the pinned tweet and then you can write the questions there. And then the second thing you can also do is you can DM us the questions and we're definitely tracking them. We'll then be able to forward them to James. So one question that has come in, James, for you specifically, your journey to asset management, did you dream of it when you were young or is it something that came along the way? Did you dream of managing money?
It's actually a very good question. So I have this mentor who happened actually to be my uncle. I saw him how exactly he was leading his life. He done become finance. Then, of course, went ahead and did his PhD in finance. And what exactly I kept on telling myself is that when I grow up as well, I'd like to be in finance. Then in university, I did become finance. Then after I graduated from the university, I was ready to join a bank. I was ready to join the Big Four, the audit firms. And I had a discussion with this mentor who happened my uncle. Danny Blair came in as one of top candidates that to consider. He happened to be friend with the then deputy managing director, Dan Blair. So we had discussions and I joined Dan Blair when he can. The rest has been history.
So if you're someone who wants to do asset management or start an asset management fund, what are some of the things that you've learned along the way in terms of maybe setting up a fund that you can share with anyone who wants to start one in the future?
One, I like to encourage anyone who wants to dream that it's actually very possible. And I don't agree that the market is saturated. I think the market is extremely young. It's just starting. And if we even just do comparison, just compare ourselves, say, to South Africa is maybe 4 times bigger the Kenyan GDP. But if you look at the number of asset managers in South Africa, there are about 339 fund managers in South Africa. And here in Kenya, we are about 40. So that is 8 times more fund managers in South Africa as compared to the number that we've got here. So the room is very big. And like I said at the very beginning, the opportunity is in financial illiteracy. To be honest, if you talk to a typical normal Kenyan is financially, it sounds bad, but it's financially illiterate. Because beyond investing in land and buying an apartment or buying a house or starting a business, normal Kenyans don't know about these other investment opportunities. And that explains why, like I said at the beginning, why close to about 2 trillion in the deposits that are sitting in banks, 39 banks. It's actually money in current account, because these people don't know that they can actually have a money market account, and if they need this money within 2 days, they get the money. So if it is of access, a money market fund will give you a crack with that. And now, as opposed to that money just sitting idle in the bank, as opposed to growing, it's even shrinking because you have to pay bank charges. Yeah, it should be earning you the 17.5 trillion that I talked about, the Kuza money market fund. So I'd encourage anyone thinking about this to start. And I've worked now with the regulators, and I can encourage everyone that our regulators are very supportive. They want the market dependent as well. We didn't have to use any connection to get a license. We just met the requirements that are set out. So just making sure that you have a solid business plan. The capital, which is 10 million, and you can show proof that the capital you have it. You have a solid team behind you, because again, asset management is about skill, like being able to see these opportunities and take advantage of these opportunities before they become obvious to everyone. So you can demonstrate the strong team behind you. You've got strong governance structures. You'll be given a license, and then you're passionate about this, and you've seen the gap. You go for the gap. The money and the clients will come.
These are really good points that you shared there in terms of creating and helping Kenyan definitely to become more financially literate. What are some of the challenges maybe you've encountered in setting up an asset management, getting it to 1 billion, that you'd also maybe want to share in terms of the challenges that you've had? And then also, what's the difference between being governed by RBA and by CMA? And how do those two maybe collide in your business?
Okay, very good question. So the challenge is no one wants to be your customer. You can have a very good product, because investors are banned their figures in the past. So of course they'll ask you, how different are you from fund? Then they'll go further and be like, okay, how many clients do you have? So when, of course, you give an honest answer, these are the clients I've got, okay, they'll be like, okay, once you get to this threshold, then we can talk. And some will ask you at their potential. So what's the minimum investment amount for your money market fund? 5,000. And their potential, these bidders who can invest 1 million, 2 million, the money market fund, but they'll start with that 5,000, which is the minimum investment amount. They'll wait for maybe a month or so, they withdraw it, they confirm actually process is working. Then you see there now, they're willing to dip their feet, start increasing the amount from entirely 50,000, 100,000. And then as you hitting milestones, the number of clients is increasing, they can hear about you somewhere else through a referral, and they become more confident. Those were our challenges, especially towards the tail end of two and maybe the first, second quarter of 2023. But now, where we've gotten, to be honest, those challenges have really become fewer. Because one, someone can see you've been there consistently, the returns are consistent and solid, you're able to explain exactly the return. And not just him, there are 1,000 similar people like himself or herself who've invested with you. Then, of course, that gives them confidence to trust you even more.
And so, like, when your journey to 1 billion, I'm wondering, at what point do you cross that threshold from we don't know you to we can trust you? At what point do you feel that?
For us, we crossed that during our launch. Kuza was launched November last year, and we had the CMA board chair who was our chief guest then, and our assets under management then was around 600 million. So after the launch, it was now clear not just to the senior management at Kuza and the board, even the clients who had come in and even the prospects, it was clear to them that this is a story that is taking shape. And that now confidence, being the confidence that has been portrayed in the company.
Give a pitch to the people who are listening and who are also seeking to invest. You can tell them, what do you offer that is different and distinct? What's your value proposition to people who come to you, and how can they find you?
It's a good question. The first thing is just making sure that there's no money sitting idle in the bank account. So if you have a bank account, you must have a money market account, and your core account should be the Kuza money market account. For diversification, you can consider, if for instance, at times you have dollar needs, to have both the Kenya shilling money market fund and the dollar money market fund. Our returns are complete from a risk standpoint. Our money market fund Kenya shilling yielding 17.53. That's the rate that we printed today. And our money market dollar is yielding 7.05. That's today's rate. Very competitive. And the good thing is that this money, whenever you need it, within 2 days, that's 48 hours, you'll get it in your bank account. You don't have to talk to anyone. You just get a profit on your phone through, say, app or our client portal, and you'll get your funds. So that's for basically short term. Then for someone who has some bit of patience, you're looking for something that can beat then these returns of 15% over a longer period of time. We look at an horizon of anywhere between 3 to 5 years. We pitching the Kuza Momentum Fund. And like I say, the performance of our Momentum Fund has been very solid. The first 4 months, now almost 5 months of the year, it's done about 40%. And it's because we saw that last year the Kenyan equity market was oversold. There was an opportunity for the Kenyan equity markets to recover, so we went overall, and that's bearing fruit. And just like the name Momentum, so one, we believe we milk the equity opportunity. We'll be rotating out of the equity in favor of fixed income, because we believe as we go to next year, these rates will come off. And of course, we know there's that inverse relationship between bond values and interest rates. As the rates come off, of course, the price of these bonds are going up. And we believe this such strong performance that has been registered by Momentum Fund this year should be something that we should be able to carry into next year. So then for pension, you work for 3-4 employees. You can't even remember the last time you received a statement from one of the employers. We can help you consolidate your pension into our individual pension plan, and you will be coming in at a good time, because as the benefits come in at the bill vested at the current high rate that the government is offering, even on a reporting basis, as opposed to most of our employers who, those statements never come. Those are some of the weaknesses that we are exploiting for us to make sure on a regular basis, actually every 3 months, you'll be receiving your pension statement, and just from a click of the phone. So just from our mobile app or our client portal, you should be able to see how exactly your pension assets are changing on a regular basis. For those clients who don't bespoke, we'll be able to down and come up with a portfolio that meets your objectives, and of course within your risk appetite. And if for instance you'd want us to trade bonds for you, we have some exposure in offshore for you, we can always do that through our private wealth management. And for the unique opportunity, for instance, you'd want to say access Eurobond, you can access Eurobonds through us, or you'd want then, as opposed to buying bonds from the secondary market, whereby maybe you don't have the economy of scale, you may not be able to negotiate for prices very competitively. We can always do that for you as well through our private wealth money. That would be my pitch.
Thank you so much. So a few questions have come in. One is, there's something maybe you didn't touch on, which was the difference between the management from the CMA side and what needs to be handled by RBA. So you can say that, and then answer this question on how your relationship with CMA has been so far in terms of business. That's the second question. And then the third question, which I would add myself, is a couple of people I think have been burnt in a few of the management companies that are out there. I think one has been known to maybe withhold funds for a while from customers because of the challenges they had during COVID. And given all that context, then what's your assurance to clients and to potential clients that yes, they can access their funds when needed, and that they would not have to go through lengthy court processes to get their funds back from you?
So the difference between CMA and RBA is that for you to actually be given the RBA license, you must have first gotten the CMA license. Then the main is really the Capital Markets Authority. So the Capital Markets Authority mostly then oversees collection investment schemes for the masses. And if then you're doing these fund management services as well, so that falls still under the Capital Markets Authority. RBA only deal with retirement benefits. So this will be like, for instance, the individual pension plan, the umbrella pension plan. And if we start then managing the gated pension mandate, the standalone mandates as well, for pension, that's your fee with the RBA. The point of interactions, you find that you interact more with the CMA than the RBA, because like you can see, we have most of our products are really under CMA, but across the two regulators on a quarterly basis, you must report back to them on their specific product, and then you're subjected to regular check. For instance, both RBA and CMA every 2 years, they come and inspect and just make sure that whatever you normally report on a quarterly basis, indeed, what's happening on the ground. The question on how has been our relationship with the CMA? I can say it's very good. And CMA, they're not just saying it, that they're keen to deepen this market. They're actually working the talk. Like, we were pleasantly surprised how fast they fast track our licensing when we wait for a CMA license. Like I said, we placed an application before the CMA towards the tail end of one. That's December, maybe. And by end of April 2022, they've given us a license. Yeah, so they are very supportive. And also, even for product approval and even taking feedback from the market, they're quite supportive. Of course, no regulator is perfect, but there is always that friction between market participants and regulators, where market participants would want to move faster as compared to regulators. But how we've worked with EMA this far, the relationship has been very good. Then the other question was, how different are we and what sort of assurance can we give? If you look at, for instance, the CMA product, there's a structure. So you have where the sponsor these unit trust products and where the fund manager. Then there's a trustee. So the trustee for our unit trust product is Cooperative Bank. And the custodian is KCB Bank. And the responsibility of the trustee is to ensure the interest of all these unit holders is really taken care of and protected. And like unit trust, there are key limits within which they must be invested. So you must make, for instance, observe single issuer at 25%. A related party can't be more than 10%. All those must be observed. And the person to ensure that is being done, of course, with the fund manager, first line of defense, the trustee has to make sure that it's happening on a quarterly basis, because we have quarterly meetings with the trustee. And all these reports are also shared with the regulator. That's on a quarterly basis. For regulated product, and that's what I'll encourage more investors, you should be going for regulated product. And even for the cases we've talked about, that wasn't a regulated product. Yes, I guess I'll leave it at that. Just make sure that you're only investing in regulated. And if then you have this appetite to go private wealth management, make sure you understand what exactly you're getting into. Because like our private wealth management, we only touch bonds. So we are looking at, if for instance, with Euro bonds and or we're investing in infrastructure bonds, doesn't mean a government can default, because we've had cases of Ghana, we've had cases of Ethiopia, the Zambia, the Sri Lanka. But you must make sure that then the fund manager explains to you that are involved and your satisfaction. So as you're making the decision, it's an informed decision.
Very important. Many questions coming through for you. So let's see. The next one is about, do you do any financial literacy trainings to get people to understand better your product? And there also someone asking about, do you invest in anything else, maybe tech aside? Away from tech, what else do you invest in? And then there was one here, I was asking whether you were going to list at some point, maybe at NS or something. Or would you ever go public and have an IP? People want to invest in your company.
Right. Okay. Let me think that I captured all these questions. The first question was around
the training. You can start with the training question first. You do training to get people to understand your product.
Very good. The opportunity in actually empowering than selling. So for us, I'm also giving back to society. We are keen to partner with universities and especially target the 30-year students and 40-year students just before they break into the job market to be equipped with basic about investing. So already last year we had such 2 training, University of Nairobi, Catholic University, something that we would want to continue doing because we believe the only way we can change the current saving investment culture in Kenya is just through financial literacy. We also get into organized training. So you find there are many organized trainings and we invited facilitators and we go impart knowledge. So for the organized training, of course we do it, but the ones that we are taking on initiative and giving back to society is what we're doing with universities and something. These are investors for the future, maybe future Kuza clients, but even if they don't invest with Kuza, we know we've made someone be better than ordinarily they will have been by just having attended our class.
Question is about, maybe I can change it a bit now. I think this person is specifically asking what you invest in, tech aside, but I think you can give them maybe a quick brief on some of the asset classes that you invested in.
What we invest in varies from one product to the other. So, for instance, money market funds, you must make sure that for it to be that liquid, whereby someone whenever they want their money, they have to get it within 2 working days. It must be invested as near cash as possible. And actually, there's a regulation by the CMA that the weighted tenure. So all these investments that you've invested in, if you look at time to maturity and you weight that against how much you've invested in, shouldn't be more than 18 months. So you'd find that a money market fund, Kenya shilling, is invested predominantly in deposits in banks, invested in short-term bonds, then also invested in commercial paper. So we do a bit of commercial papers, and these have to be to micro lenders, but the commercial paper has to be rated, and from where we sit, must be convinced that the risk of default has really been mitigated. Like for instance, we don't touch micro lenders who have balance sheet below 2 billion, who haven't reported profit in the most recent 3 years, in who non-performing loan book as a percentage of the entire loan book is more than 20%. So that's for money markets and shilling. So then for dollar, we invest in Eurobond, like for instance, the Kenyan Eurobond maturing next month and the one maturing in 2027. Our fund has invested in those two Eurobond short-term deposit as well, and also dollar yielding commercial paper. So fixed income funds, they are predominantly bonds, and we're going long term and deposit. Momentum funds, we invest in equities. So the fund is asset class agnostic. So you can invest in equities, you can invest in fixed income. So for instance, now we are very constructive about the market. It's pretty overweight. The allocation is more than 60%. But as of course, we start taking profits, the plan is to rotate to interest-bearing assets. And the fund can also invest in offshore. You can invest in offshore equities. You can also invest in offshore fixed income. Broadly, those are the investments that we invest in. As of now, we don't invest in property, and we don't do any crypto.
Yet. Someone here is wondering how you get working capital, and how did you convince the first investors to invest in you? Maybe you can recap that quickly. So how you get your working capital day to day? How do you make money, by the way? Now you're managing people's money, but how do you make money? And in that regard, also, I think you could talk about the fees for some of the products so that people can be aware of that.
Our unit trust product, we charge 2%. Money market case, money market dollar, fixed income funds, momentum fund, both Sharia and non-Sharia, 2% management fee. Then for our pension product, our individual pension plan, the fee is 1.5%. And for umbrella, the fee is 1%. Yeah, so that's how exactly we make our money. But again, just saying that Kuza, we were founded in 2021. So as the assets grow, of course, the revenue will get to a point whereby it pays all the expenses. But the good thing is that the shareholders of Kuza put in adequate capital that is sustaining the company up until the company is break-even. So based on our projection, rather than last year that the company will be loss-making, but as from next year, the company will be profitable. Like the target under management that we expect to close at is around 2 billion shilling, and we have a target of hitting at least 10 billion shilling by the end of 2027. But as we hit 2 billion under management, the company turns profitable.
And then has it been your deliberate efforts to drive the company towards break-even? And have you done any fundraising in terms of in building up the asset management company?
Didn't have to do, frankly, second round of fundraising because the capital that was put in at the beginning is actually more than sufficient to see the company up until break-even, because we got commitments from shareholders. So then we keep on doing capital call, and based on how exactly the company is performing, we may not call all the capital that was committed by the shareholder. Maybe at best we'll call like 70% of that capital.
And what's your deliberate goal to drive towards break-even? The company, the reason why I asked that is for the past year or so, there are several startups that have sunk or gone under because of the low interest era of the past 10 or so years. They have been addicted to raising capital, constantly raising capital. And now for you, you can say that you've not even had to call up all the capital that was raised. So what makes you different in terms of your approach to asset management and both running a startup?
Okay, it's a good question. So the shareholders who came on board, they came on board on the strength of the business plan to speak for them. And so they constantly held management to account to deliver as per the business plan. There are 3 milestones that we have to unlock to be able to access more capital. So as much as, of course, the targets are not cast on stone, but the business plan was a very good guide. And we are working as per the business plan. Some targets were ahead of the business plan. Some we are maybe lagging behind. But as regards to profitability, we actually are ahead of the business plan. So I think what might be different between maybe one company to the other is how realistic was the business plan. Was the business plan based on our too aggressive target that when you subject it to reality, those are unattainable? I think we are quite conservative in regards to our targets, and that is making it easier for us to get to our goal even ahead of time.
Great. Well, we've exhausted all the questions. So perhaps you can now paint us a picture of, I think you had targets until 2027 and all. What's your long-term view on what Kuza Asset Management can be? And as you say that, also you can invite people on where they can find you, maybe on the app, on Twitter and all these social media platform, and how they can reach out to you to be able to be part of your investing journey at Kuza. You should tell us why Kuza, by the name Kuza. We didn't touch on that. Go ahead.
Actually, I'll start with the why Kuza. So Kuza is trained for nurture. At Kuza, we are nurturing people's financial journey. So as you come to us, it doesn't matter where exactly you are in your financial and investment journey. We'll be able to nurture it and grow with you up until you get to the destination that you aspired. So that's why we chose the name Kuza. Where we see Kuza, so the Kenyan investment market, Kenyan asset management space, it's only getting started. And I was actually just looking at, trying to just even look at the unit chart number. I think as at end of March, collectively, the industry was at 225 billion shilling. But if then you look at the growth of the collective investment scheme last year, the growth was about 50 billion. And end of 2022, it was around 150 billion, then closed at 215 billion end of 2023. We haven't seen such growth in many years for this market. So there's something that is changing. And as the industry is growing, it's not like another asset manager losing market share, but all streaking a draft in their asset under management. Most of this money is the money that was sitting idle in banks. We expect, for instance, the collective investment scheme in the next 10 years to hit like 1 trillion shilling. And so if we are looking at 225 billion now to 1 trillion. So you're talking about a potential growth of close to 800 billion. And Kuza, part of that, would want to be heavily involved with that. And the trick is really pushing the envelope as regards to financial literacy. So the next 5 to 10 years will be predominantly our operations will be in Kenya. But we're also looking Africa-wide, the same opportunities that are available in Kenya, we see them elsewhere. The markets that are even younger than Kenya. So Ethiopia is only opening up. South Sudan, they're yet to get their act together. We have Somalia, we have DLP. Those are markets we're looking at. Because in 10, 15, 20 years, we would want Kuza to have a foothold in all those markets. I think, Mukaya, at this point, I thank all the listeners for sparing their time to listen to me and encourage them to actually implement some of the discussions and the ideas that we've shared today. And if then you'd want to come to Kuza Asset Management, like I said, more than 90% of our customers haven't even come to our office, but you're still welcome to come to our office. So you can go to your phone, Play Store, App Store, search for Kuza.Africa and start your self-onboarding journey. Our offices are along Third and Ngong Avenue. That's in Upper Hill, Tower, or 12th floor. That's where we are found. Back to you, Bokaya. Wishing everyone a good evening and thank you so much.
Thank you so much. A couple of questions that are coming. We'll send them to you and then you can answer them on the timeline. I see one on Emma Kiba and the impact it may have on the future of asset management. Thank you for joining us this evening on Mongo Spaces. Join us again next week. We'll have more discussions for you. So congrats to Kuza, especially for getting to 1 billion. We hope and pray that you get to 2 billion by the end of this year, as you said. And by 2027, you get to that 10 billion. And who knows, soon you may be celebrating $1 billion, not Kenya shillings alone. So congrats, James, for taking the bold step to launch your own asset management company. And thank you for joining us, taking time to come and answer our questions. If you have any questions, James is always available on the Kuza Asset Management Twitter handle. to just follow them and make sure to ask the questions to them. He's very open in terms of answering the questions because, as you can see, he's been able to come in and answer many questions and do think really critically about investing for the long term. That's our aim here at Mwango Capital, to bring you a good conversation, but to challenge you to be able to invest for yourself and for the future. So I think that's very important. Don't let the money lie idle in the bank account. Come, put it good use. Then, as you heard, you can actually get them some of the money very quickly. And the liquidity is quite high, as James has told us. So once again, thank you so much, James, for joining us today. Hope to have you again soon. And definitely, we wish you the best in your journey to building Kuza. Asante sana for the rest of you for joining us this evening. See you again next week for another conversation.